Hello and welcome to another Outsider Club Chart Wars. It's May 16th, Friday. I'm Brit Ryle. This is my good friend and colleague, Christian DeHaemer. We call him the Hammer because he always nails it. Once again, Christian and I are going mano a mano with two charts. And as usual, I'm going to give Christian the first swing. Christian, let me have it.
All right, today we got Cisco Systems. You may remember Cisco as a big winner back in the dot-com days. In fact, they were such a big winner, it's taken them 25 years to get even close to recovering. They, uh, they used to be in switches and routers. Now they're phasing out their switches and routers and moving into AI systems and security. They recently bought a company called Splunk last year. Um, what I like about them is they're consistently beating earnings for the past year or so. They're cheap, and I just like this chart. One, because there's somebody that bought 25 years ago and sitting there waiting. Maybe this year, and maybe this year will be the year because we're hitting new highs after a consolidation period of about 6 years. You can see by this chart, the tridirectional indicator, which is moving averages, is slanting up and they're equally distant apart, which is what you want to see. The MACD has a crossover. It's not below the zero line, but it's a crossover. And we're hitting new like 25-year highs. We'll get to 26-year highs pretty soon. The reason Cisco is moving is because they beat earnings. Company posted an EPS of 96 cents versus 92 estimated. Revenues were up 11% year over year. This is a robust recovery after declining revenue. As I mentioned, the company bought Splunk last year, and that's been accretive to their bottom line. Revenues were up 117% in their security department. And these high growth areas align Cisco with AI and cybersecurity. They raised full year 225 guidance, and their product orders are up 20% as well. The company has a forward PE of 16, which is lower than the 23 on the S&P 500 and much lower than every other tech stock out there. It also pays a 2.74% dividend. So I like this company because, maybe you're tired of, all the other companies fluctuating, being up 20% and down 20%. You can buy this stock and just hold it for the next couple of years. You'll get your, 20% average growth out of it, and that'll be fine. You'll be happy. That's what I got
Nice.
today. Cisco Systems.
I like it. I like it. Christian, for my chart today, we're going to talk about a company who had, in the last 6 months, had one CEO murdered, another one quit. They lowered guidance and then completely suspended guidance, missed earnings, and now they are facing a Department of Justice investigation for Medicaid fraud, Medicare fraud. That's right, United Health Group. And I'm pulling up this chart because I want to show you what a bottom looks like for a stock. It's right here in the little bubble. This was yesterday. I wrote about it on Outsider Club. In fact, a bottom gets formed when the stock gets crushed intraday and then buyers step in and bring it right back where it was. And that is just a textbook example. The stock's extending today, as you can see. Now, these lines that you see here, you have to go all the way back to 2021, 22, or 2020 and 2021 to see why they're relevant. This is the support line here that we're just hitting today, right around 285. And then this is the top of this little channel here, up around 360. You see the little double top. That, I think, is going to act as a magnet for the stock to run higher. The stock's fallen from 600 to 250 in like 3 weeks. 250 was its pandemic lows. Really, really remarkable just fall from grace for the company for obvious reasons that I already listed. United Health Group did $400 billion in revenue over the last 12 months. The market cap is currently $250 billion, which means you're buying it at a discount to revenue of 0.7. Forward PE right now is 10, which also makes it quite cheap. I think you just buy this and hold it, Christian, because it's going to recover. And that's what I got for you today.
That's a
So
good
that's
one.
another, you like it?
Yeah, gaps get filled.
Yes, they do, and there's several really big ones. I mean, this is the first one, up into this most recent gap to the 360 level is the first one that I think really gets filled. I mean, you have this one to go, but this one could happen very quickly. This could be a couple days away from filling. I wouldn't be surprised at all. So anyway, United Health Group, that's what I got. And again, this is another edition of Outsider Club's Chart Wars. I'm Brit Ryle. He's Christian, the Hammer, DeHaemer. Take care, and we'll talk to you soon.